Hello everybody, I just wanted to make a quick video on SentinelOne and really on the market madness that's going on right here. So what is SentinelOne really briefly? SentinelOne is a comprehensive enterprise security platform that provides threat detection, hunting, and response features that enable organizations to discover vulnerabilities and protect IT operations. It is a competitor of CrowdStrike, and CrowdStrike is the clear market leader in that space, and SentinelOne is the next second. Unsurprisingly, both SentinelOne and CrowdStrike claim to be the best, but in reality, it more comes down to features and whatever companies prefer. Some companies prefer CrowdStrike, some others prefer SentinelOne. But as you can see, they have pretty much the same reviews. So they're head-to-head competitor. And this is very interesting here. So in one test, SentinelOne says that they perform much better at threat detection at CrowdStrike, that they are absolutely the best. And then, of course, when you go to CrowdStrike's website, they tell you all of the reasons as to why they are much better than SentinelOne. So it's tough to know. It's tough to know. But as far as the quality goes, when I analyzed the company 2 weeks ago, it was clear to me that CrowdStrike was a little bit of better quality, had better leadership, more insider ownership, and a bigger customer base. Nonetheless, SentinelOne is grabbing market share, and they could have been so unfairly, they have been so unfairly punished by the market, because even though they are a seat-based SaaS company, they're still showing no sign of a slowdown. There's no sign of a slowdown in SentinelOne. And so briefly, I just want to briefly look at the earnings. The gross margin is still excellent. Annual recurring revenue is at 106% year over year, and total revenue is going up 106% at $115 million. So the company is doing so well, but perhaps it makes even more sense. Oh, and the retention rate was actually just down just a few percentage points, but the dollar-based retention rate is just as good, essentially, as it was last quarter. So the company hasn't seen a slowdown on growth, but the best way to see that is kind of to put it in a chart. I put it in a chart right there. Try to draw it before they release their own investor presentations when the call takes place. But you can see the growth keeps going. Since IPO, they had 125 million each quarter. So to me, there is no sign of a slowdown quarter after quarter. And year over year, a quarterly growth at 106%. You really can't infer much here. There is no trend of it up or down. There is no trend of a slowdown. Showing one quarter is not enough to show a trend of a slowdown. So the stock, to me, as an intact thesis, is doing just as good as it was when it IPO'd. And it really makes no sense. Like when I look at this, when I see the stock being down 81% from peak, and that's just about a year, being down 81% in a year makes absolutely no sense for a business who is growing and who has grown its revenue by more than 100%, and that is in one of the fastest growing fields of IT. So given that the stock is flat and the stock is way more down from the last time I made my video, I will be considering opening a position, a smaller position than CrowdStrike. CrowdStrike is my bigger position in the space, but I do think the market has unfairly punished this company that is winning and that is getting a share of that market, a share of the cybersecurity total addressable market. They're getting their share. So anyways, thank you so much for watching. This was not investment advice. This is just a quick video for entertainment purposes. Please subscribe, please like, and you can follow me on Twitter at BeatTheDenominator. Thank you so much and have a great day.